you look at the royalty space today, you've got a number of the really big royalty companies, tens of billions of dollars, and you're paying a huge amount to get into those. And I think that Elemental, we've just listed the company 2 months ago, but we've been operating for 3 years with a really good track record before that. I think Elemental is the opportunity to get into the next fast-growing royalty company at the beginning of its life, which actually investors don't often get that opportunity to do.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we are digging into a company. Fred Bell was kind enough to give quite a great education on the gold market earlier today. And also going to stick around, talk a little bit about Elemental Royalties, the royalty company that Fred is running, and explain what they do and how it all works and what the advantage is and why people would probably want to know about how that all goes. So Fred, great to have you back on here. How are you doing there?
Very good. Thank you for having me, Chris.
Well, I appreciate you being here. And can you tell people, especially maybe to start, give people an idea of exactly what it is that you guys are out there looking for and what types of deals you're doing, what kind of exposure, and so right off the bat, investors can know what they're looking at and what you're targeting.
Absolutely. So Elemental is a listed gold and silver focused royalty company. And that means that we are going out there and we are acquiring royalties over gold and silver assets, mostly producing assets, which give us immediate cash flow. And we never have to contribute any costs on going forwards. It's a bit like a sidewinder missile, fire and forget. Once you've bought the royalty, It goes in the drawer, and then you've got cash flow for as long as perpetuity if they keep mining that asset. And there are many assets that have gone for 40, 60 years and still mining. And so you buy these royalties and you put them together, and all of a sudden you have a very low risk way to play the precious metals, gold and silver space. You get the leverage to gold and silver prices, but you have no real costs ongoing, and you have all the downside protection of a diversified portfolio. And if you look at the royalty space today, you've got a number of the really big royalty companies, tens of billions of dollars, and you're paying a huge amount to get into those. And I think that Elemental, we've just listed the company 2 months ago, but we've been operating for 3 years with a really good track record before that. I think Elemental is the opportunity to get into the next fast-growing royalty company at the beginning of its life, which actually investors don't often get that opportunity to do.
Yeah, and in addition to that, you've been doing this for a while and have quite an interesting background in the gold field. Also part of the Discovery Group, which one of the things I like about the companies you have in there is that you're able to talk to each other. And I mean, I bring everyone outside of Santa Claus on here and they say, look at who's running the companies. And that's the first place to start. So you have that advantage of having access to some other expertise.
Absolutely. And I think that on the board and management team of the company, we have some really experienced, successful people in the mining industry, people who have been there, who have built up companies to hundreds of millions of dollars or $1 billion and sold it. And joining the Discovery Group from listing, I think has been very helpful for us, because they are a really high quality group of companies who share an ethos of honesty, of doing things the right way, of approaching it the right way, making money for shareholders. And being part of that has really given us a better network and a great platform to build from. And I think that when you combine that with the passion, the drive and the ambition of someone like me in my mid-30s, and I've been in the industry for more than 15 years, I think that's a really potent mix, because we're still hungry. We will sit in the office till 4 a.m. every night if we have to do it to build this company. And since we started it privately, we have grown the revenue at 100% a year since 2017 when we started. And so we were able to come to the market in July this year And we had a track record of 3 years of raising money at a higher share price every single time. And each acquisition we have made has added value as we've gone. And I think that is a really important part of our story. The fact that we took the time to do this privately first and get the track record. So when we came to market, we could be as transparent as possible and show everyone this is what we've done.
Yeah, it's like the opposite of the COMEX. And Fred, one of the things that I have pulled up here, perhaps you could give people, oh, actually, before we get to that, I know what I wanted to mention is that, as you said in our other call we recorded, one way of putting it in perspective is for people, especially all you GDX investors out there, so people that are looking for a diversified portfolio, some of these companies, whether it's GDX, GDXJ, SILJ, which has a lot of companies that don't, to me, seem like silver junior miners, you know, rather than having these things, which I don't believe are, I mean, there's various criteria, but it's not necessarily someone even attempting to say these are the ones that I would put my money in, and that's the role that you fill there for Elemental.
Yeah, we are a great way to play the gold and precious metal space. And if you had invested in Elemental 3 years ago when we started, you would have done an awful lot better than investing in the GDX, than investing in gold or silver. And I think the key thing about the royalty model is that we're a very fast growing company, but each acquisition we make diversifies us and makes us even less risky. So you're getting all the growth upside of a company our size, but with the royalty model, you're also getting all the downside protection. So it really is the best of both worlds. And that's what attracted me, and I think a lot of the investors we have got to date, a lot of the institutional investors, I think that's what's attracted them as well. Good quality assets, leverage, great way to play the gold space, and without all the risks that come from being directly involved in mining companies and the mining industry.
Yeah, and Fred, I'll pull that back up here. Here's a portfolio overview. Can you give folks an idea of how much gold, how much silver, whatever else in there that is a significant percentage in some of the regions you're looking, and or if there are regions that you're avoiding so people can know what they're getting there?
Sure. So we're 90% gold and silver weighted, so heavily precious metals. And we will keep that going forwards, if not increase it. And the regions we're looking at are typically regions where there is an established gold industry. And so we have 2 royalties in Australia, we have 1 royalty in West Africa, 2 royalties in one in Chile and 1 in Mexico, and 1 in Kenya as well. So we are really diversified by jurisdiction and also by operator. And that's so important because COVID's probably a very good example. And you saw with COVID, some countries were hit much worse than others. And actually, if you're invested in a mining company that is in, call it as an example, Brazil, there have been a lot of issues with COVID in Brazil. And I think it's impacted on operations there significantly in a number of cases. And the benefit of the royalty model is if you've got 6 or 7 different royalties, or if you've got 10 different royalties, if you've got one of them in Brazil, you might have some issues there for a few months, but all your other assets aren't nearly as impacted. And I think that's the key benefit of a royalty company versus a mining company. And a royalty company versus then gold itself, or the GDX, is simply that you get and history has shown this, you get a much better return through a royalty company than you do by investing in either of those 2.
Yeah, and Fred, I was wondering if you could you told me a story before we hit the record button about just how some of the people don't have as much of a background, and some of these were, I mean, like buying and valuing and completely mismanaging things. It almost reminded me of, you know, how if someone was fresh out of an MBA program, knew nothing about mining, they'd throw something in a template, one of those things that sounds great in the book report because you were trying hard, but
yes.
Could you share that for folks?
I think we like to refer to it as spreadsheet warriors. So someone who's had classic come out of university, and they've had a couple of years of doing Excel and building financial models, and they're suddenly thrown into real life, and they see a project and they see an asset, and the operator says, I'm going to produce 100 ounces of gold a year. And they put it in their model and it looks brilliant. And they go, this is fantastic. Right. What actually reality is, they're never going to produce 100 ounces a year, because anyone in the mining industry knows that there are 10 different problems with that asset, and it's only ever going to get 50 ounces a year. And all of a sudden, it's gone from an amazing investment to a terrible investment. And the key thing I think in the industry is, and I've learned this over time, is if you work with good quality people, you tend to get introduced to other good quality people. And if you end up working with the sharks, you will end up swimming with the sharks, which is not where you want to be. And there is no real way to learn that apart from immersing yourself entirely 24/7 in the industry. And you get to know the people, the characters, you get to know the people who are genuinely building companies and trying to add value, and the people who are trying to take the shirt off your back as you're having a drink with them.
Yeah, so if you get a call from your local Goldman Sachs broker trying to sell you their latest deal, or you could look at Frederick here, who was actually doing it on the ground in Ghana. I don't remember that in my business school program. General manager of an ASX listed uranium company, Young Rising Star Award at Mines and Money 2018. So Frederick, certainly quite an impressive background and list of things you've accomplished. I guess a question I think would be helpful, really helpful for investors. What's the biggest risk? What can go wrong, and how do you prepare and address for that in advance?
I think the biggest risk that we can have is operational failure at one of the assets where we have a royalty. And actually, the best way to prepare for that is to diversify the portfolio. Because if you start with 2 different mines and one of them fails, that might be 50% gone. If you start with 5 different mines and one of them fails, you might have 20% gone. But if you start with 10, 20, etc., it is increasingly unlikely that you are going to have failures across different assets, operators, countries. And so all of a sudden, you have a very diversified portfolio. And I think that's one of the key strengths. If you look at a typical mining company, it's actually a huge amount of work to operate assets in different countries. And I remember working in Malawi, which you mentioned earlier, I think, and even getting mine samples across the border was a huge amount of work. And at the time, Malawi had foreign currency shortages, fuel shortages, you name it. Operating there was not easy. And if you want to operate in 2 or 3 different countries with 2 or 3 different assets, you almost need 2 or 3 different management teams. It's that much extra work. Whereas for a royalty company, you buy the royalty on each asset, and there is very little ongoing work you have to do. So I often say it's a bit like a music royalty. Taylor Swift sings a song, and the person who wrote the song for her gets a royalty on it. And every time that song is played, they get $1. She gets a royalty on it, and every time it's played, she gets $2. And maybe there are 2 other people involved. And a royalty owner in the mining space is very similar. We own a royalty on 5 or 6 different assets, and whenever they produce, for as long as they produce, we get a royalty over them. And when you start to get 2, 3, 4, 5, 10, 20 of these royalties, you suddenly have an incredibly powerful model, because you can still have the same 2 or 3 people running the company.
Yeah, and how does, in terms of the royalty model, how does it look for the leverage? Should we, I don't know, Jeremy Powell's, he's promised hyperinflation. I think he's reading from Shinzo Abe's campaign speech playbook when he brought that to Japan. But I mean, so let's just say that the gold price keeps rising with the next couple trillion of stimulus. How does that look for your cash flows?
Well, it's fantastic for 2 reasons. The first reason is that if the company is producing 100 ounces and the gold price doubles, we will get double the amount of money directly from them. So we benefit directly on that basis. But then, and this is where we get the real benefit, most of these mines have a huge amount of resources, often that aren't economic to mine or don't mine or are there for exploration. And when they initially build a mine, they might use $1,000 gold price and leave everything else in the ground. And if the gold price suddenly turns out to be $2,000, they can go back to it and go, oh, instead of 1,000 ounces of gold in the ground, we've got 5,000 ounces of gold in the ground at these prices that we can mine. And so for us as a royalty owner, we suddenly go at no cost to ourselves from having a royalty over 1,000 ounces to having a royalty over 5,000 ounces. And so that is a real key benefit you get. And if you believe that currencies are going to keep weakening, governments are going to keep printing money, then you must believe that the value of gold is going to keep going up. And that makes royalties over assets that are producing gold mines, it makes them even more valuable, because everything that they couldn't mine when gold was at 300, all of a sudden it's economic and they can mine it. And that makes a huge difference to royalty companies, and is why I think they perform so well in versus the cycle versus the sector versus gold itself.
Well, that makes a lot of sense to me. And Fred, for people sitting at home watching who aren't particularly stimulated by a 0.6% yielding 10-year treasury, with I used to make the joke about how there was a 2% inflation mandate, but now that there's something called inflation targeting, I guess it's bigger than that. So for people who aren't like saying, wow, let's get some of that, would you be kind enough to share how they can find out more about what you're doing, keep track, and website and all that good stuff?
Absolutely. So our website is elementalroyalties.com. That's all one word, www.elementalroyalties.com. And we are listed on the TSXV in Canada with the ticker ELE. And we're still as I mentioned earlier, we've only listed for 2 months. So I think actually a lot of investors are still finding out about the company, and that's great from our perspective, because it means that we've got an audience that still don't know the story and that we can introduce ourselves to. And one thing I would just add to that, and actually it was from your comment on interest rates at the moment, one of the fantastic things is that as interest rates come down and borrowing costs come down, instead of paying 5% to borrow $20 million for a royalty company, you can pay 2.5% to borrow $20 million for a royalty company to then invest in gold royalties. So you're almost getting a double benefit from it. You're going, hang on, the value of these dollars is going down, the value of gold is going up, and I can borrow more money at even less cost to do that. So I think, again, that's where you can get some of the leverage.
I think the only way you could top that is if Elemental Royalties could somehow solve American politics as well, although that may be impossible. Although Fred, just again, if you could let folks know how they can get more information,
absolutely.
Sign up for the mailing list is on the contact tab.
Yeah, go to the website, contact us tab. You can sign up for our news releases and follow the story as we grow it. And I think that one of the benefits of being I'm 34, so when I look ahead of myself, I think Elemental, it's not just the next year, it's where are we going to be over the next 5 years, 10 years, 20 years, because I know that I'm still going to be working when I'm 60. The government here is telling me I will now probably be working till I'm 70 or 75. So there's an awful lot ahead of us. And I think to come in at the start of that journey, when we've got a really good track record, we're a newly listed company, and when we've got leverage to gold, I think that's the perfect opportunity to start to get to know Elemental. And if anyone would like to reach out to the company, either myself or one of my colleagues in London or in Canada, would be more than happy to speak to you.
Well, and I think that's a nice part. I will dispute part of what you said there, if I may. I don't think you'll be working I mean, I think that's what's nice about when we find what we're meant to do in life, where, all right, let's say whatever money is taken care of, it comes across to me is that you're doing something you find interesting and are going to enjoy doing. And certainly that's something that I look for in a company. So Fred, I appreciate you joining me today, and thanks so much for being here. And we'll look forward to following how things are coming along with your success.
Thank you, Chris. It's actually very enjoyable doing interviews like this. So thank you for having me on here.
Well, thank you. We'll have to do it again soon.